Good afternoon. I'm Zheng from DCS. DCS is an issuing and acquiring bank in Singapore. We are started to do stablecoin payments from the 2024. So today, I will be the MC for this panel discussion. I'm sure it's going to be a very exciting one. So here, I would like to invite each of our guests to give a brief introduction about yourself and your organization. Let's start from Rita, please.
Thank you, Zheng. Zheng was my old colleague at Ant for many years, so old friends. I'm Rita, CEO of R&D Technologies. We're from Hong Kong. I gave a speech this morning. We are a stablecoin payment platform player, and also one of our subsidiaries, R&D Innotech, joined the stablecoin issuer sandbox last year in Hong Kong. Good to be here.
Hi, first of all, I'd like to thank Wang Xiang for having me today at this panel. My name is John Cho. I am the VP of Partnerships at Kaia Foundation. If you're not familiar with Kaia, Kaia is one of the largest L1s in Asia, and we've actually been gaining a lot of momentum recently due to being the blockchain of choice for KakaoTalk and Line Messenger. So outside of China and WeChat, we actually have ownership of the largest distribution channels in Asia, and recently we've been leveraging this distribution channel that we have to really expand out our stablecoin infrastructure. So really looking forward to the panel today.
Hi everyone, I'm Xin Song from GSR Markets. We are known as the largest and most established liquidity provider in digital assets. So we were founded in 2013. We've served over 500 token issuers and tens of exchanges, including regulated exchanges like HashKey in Hong Kong. So thank you to Anjiang for inviting us today. But we are more than that. We are more like a full-service investment bank for Web3 companies. The joke is GSR stands for Goldman Sachs Reinvented. So everything that Goldman Sachs would do in the equities market or Huaxin Ziben, right, the China Renaissance for Chinese Web2 companies, we would do it in digital assets, from VC to secondary markets, liquidity provision to late-stage asset management services. Thank you.
Hi everyone, I'm Zheng. I'm the head of APAC from Tang Foundation. Tang is a layer 1 blockchain created by the second largest worldwide social network in the world. Yeah. So and actually this social network is used by all crypto users in the world, right? So yeah, and we focus on mini app platform. We focus on many user adoptions. Our aim is to adopt 100 million users by 2028 to Web3. Yeah.
So let's get started. So Rita, you made a very good presentation in the morning. I hear it from beginning to the end, right? Very exciting regarding about stablecoin. I know that you're doing stablecoin issuing and the stablecoin payments, right, in Hong Kong. I think that everyone is curious, like your regulatory environment in Hong Kong sounds like there's some big thing happened, right? Especially in August. Would you like to share with us regarding about your current situation with regulators, with your local regulatory framework? Yeah. I think everyone is interested.
Yeah, so I cannot say anything about it, sorry. But you know, as you know, as I shared this morning, the law passed in May 21st, and it became effective on August the 1st. So it's very exciting. And as I mentioned, it's unprecedented that the time between the passage of the law to the law becoming effective was so short, right? Only 2.5 months. And also with the passage of the law, the regulatory framework, the guidelines, detailed guidelines was also announced. That's actually probably one of the first in the world to have such detailed guidelines, you know, when it comes to stablecoin issuance by a, you know, jurisdiction that's, you know, like a major financial center. So I think that's quite exciting for Hong Kong. As I mentioned this morning as well, RD has been there every step of the way, right? Pretty much since the company was founded in 2020, our founders, our founding investors were very determined that stablecoins can only go into mainstream use when it's regulated, when it has regulatory, you know, recognition. So now 5 years has passed. We're finally here. So we're very excited for the next step of what's going to happen in Hong Kong.
Thank you, Rita. And then South Korea is another very hot market for the compliance, for the stablecoin payment license or stablecoin issuing license, right? We also heard a lot of things about Korea. Would you like to share with us, John, regarding about what happened today in South Korea?
Yeah, so South Korea is definitely a unique market. I'm sure a lot of you remember back in 2017, South Korea's crypto trading volumes was like at one time #1 in the world, right? And the very interesting thing about that is institutions are actually not allowed to trade crypto in Korea. So 100%, well, I mean, assuming that there were no institutions trading, but 100% of that volume was retail. So the largest trading volumes in the world, and 100% of that was retail. It's kind of unprecedented. There were times where crypto trading volume would surpass equities in South Korea. But post 2017, 18, when we had the second bear market, there was a lot of damage done to retail. So I think South Korean lawmakers and regulators have been very conservative and very hawkish when it comes to crypto regulation. So we actually do not have any crypto regulations in South Korea at the moment. But Hong Kong and Japan has been spearheading crypto regulations in the area, in the region. And I think Korean regulators, especially since the Genius Act, has been basically forced to really address this issue. And right now, because of what has happened in the past, especially with Korean-related projects like Luna, so they are still taking this very conservative. So recently, in the media, there was talk about how the government would step into intervention in regards to listing practices for exchanges. So this has been exaggerated a little bit. So I am actually part of the Digital Currency Committee in South Korea. So I regularly meet with lawmakers to discuss directions of frameworks and regulations. And it's not that the government will directly intervene in terms of listing. What they want to do is they are now in a position where they consider crypto as a potential growth vertical for South Korea together with AI. So what they want to do is they want to set up the foundational frameworks and regulations that will allow Korea's crypto industry to really grow. Now, for crypto to grow within a specific region, you need composability, you need alignment between the different builders, sectors, verticals, and everyone involved. So the recent news around exchanges is not necessarily, again, direct government intervention, but what they want to do is they want to help exchanges set up a standardized set of requisites for tokens. So a standard, because up until now, with most other exchanges, every exchange decided their own listing standards. But what the South Korean government wants to do is they want the exchanges to work together to create a set of standards that will be basically used by all the exchanges in South Korea, because that way it will help facilitate alignment between the different players in South Korea. So that said, though, on the stablecoin front, the South Korean government, they are very bullish. And just to kind of like share expectations in terms of the actual law passing, most likely the law will be passed towards the end of the year, if at the latest early next year. So when that happens, the gates will definitely open for institutional participation in the space. But yeah, I hope that answered your question.
I think South Korea market is a very exciting market. I should prioritize the market in DCS target list.
You should.
So Xin, I know that you're from Singapore, right? So right now in Singapore, a lot of people also talk about the stable coins, right? But in your mind, how to balance this innovation and also the possible, regulatory requirements? It's going to be a very challenging question. I would like to have your inputs here.
Yeah, sure. I mean, I can talk about regulations in general very quickly, touch on a little bit of Hong Kong and South Korea as well, and then speak a little bit more about stablecoins specifically. So in general, from a regulatory perspective, we're known as being one of the most compliance-conscious crypto-native trading firms out there. We're all from traditional finance background. I was formerly a portfolio manager in equities at BlackRock. We are seen as the boring traditional finance guys, but now as a crypto enters the mainstream, boring is the new sexy. What that means is we're the first market maker to get the license in Singapore under the MAS, and we're the only one that's also got a broker-dealer in the US, where we've just acquired a shell and are applying for sub-licenses, as well as have approval in the UK, and we're speaking actively with the Hong Kong and Korean regulators as well. So that gives us a bit of an idea of the different frameworks and what people have done well and not so well. In Singapore, I think why we chose to set up the Asia Pacific headquarters there is because they were the most proactive, right? In 2020, clear guidelines, we're open for business, there's a major payments institution license available, come to the sandbox and you can do business here. So we set up. However, the cons were that this is not a holistic framework, right? This is only for payments narrowly. It doesn't really govern exchanges. It doesn't really govern market makers or issuers of stablecoins necessarily. And Hong Kong, conversely, was a bit later, but it was a much more holistic, broad framework, type 1, 2, 4, 6, 9, licenses, 7, right? And that's much clearer. But the problem with the Hong Kong framework is that it's also very restrictive in terms of regulatory capital requirements, in terms of the listings requirements. John touched on that. Korea, we're having active discussions. We're trying to do things the right way there, and we have not traded in Korea for many, many years since the regulations came in, unlike some of the smaller competitors in the space. However, the way to do this is the right way. So we've set up local entity, we've applied for the VASP license. Again, it's like Hong Kong, ABCDE, brokerage, exchange, it's different. That's great. And then finally, the US is the elephant in the room. The good thing that they've done is, since the new administration came in, it's completely flipped from everything is a no to everything is possible. Even the president is issuing a meme coin. That's dangerous. It's not perhaps completely holistic and structured, because whether it's the Clarity Act or the Genius Act or Project Crypto, there's a lot of activity, but it's not necessarily all joined together like some of the Asian markets. So what we would like to see is A, pro-crypto, proactiveness, openness, but B, a thoughtful and very structured approach to things. And that's what we're seeing. And we're seeing that in the stablecoin space as well. We can expand on that a bit later.
Thank you. Zheng, I know that you're from Tom. You may not directly face to the regulators, right? But if you look at the stablecoin, we cannot bypass this compliance issue. So what is your opinion about that? Do you have any concern regarding about the current regulatory environment, or actually you are quite optimistic for that?
Yeah, this year I think everyone will recognize the launch of the stablecoin audience in Hong Kong is the most important moment for the stablecoin regulation. Yeah, so it creates a very clear and concrete framework that what can be done and what can not be done. So from my daily work, I face many traditional like commodity traders or some tech giants whose business is in cross-border e-commerce or even some online worldwide gaming. They come to me and say, hey, John, can you introduce the stablecoin regulation framework to us in Hong Kong? Yeah, we are doing many cross-border business, and we want to transfer our asset, our fund through, for example, Tom blockchain. But before this Hong Kong stablecoin audience, they thought about it. They are thinking whether it's compliant, especially from Chinese perspective. So yeah, so what makes me most impressive this year is that we already have a very clear and correct regulation framework in Hong Kong. But what I concern most here is that still I think the lack of liquidity access from a central bank will be a main concern, I think, in the future. For example, if you remember, in 2008, in Wall Street, after the Lehman Brothers bankruptcy, one money market fund called, sorry, I forget the clear name, people just redeemed without under the value of the $1. So yeah, I think for this part, the regulation can be more clear.
Thank you, John. So the next question, I think that Rita, you will be the best guest to answer this question, right? It's directly related to your business. Yeah. What will be, or where we can find the real killer use cases for stablecoin?
Yeah. So I think, in my speech this morning, I talked about the diversification of use cases of stablecoins in recent years or in recent months, right? Like before it was more DeFi trading, collateral, digital asset trading. Like I think in recent years, as John mentioned, right, like there are more and more in this region, right? It's all about utility. There are more and more traditional businesses, commodity trading companies, exporters, importers. There are all kinds of different stories that you'll hear in the market if you go talk to different companies in the trading space that, like the pain points they have in cross-border payment, right? Whether it's exporting to some emerging markets where they cannot get paid, or they're importing some stuff from certain countries in South America, but their funds can only arrive after 2 weeks while the products rot at the port, right? So there are all kinds of these stories. So stablecoins can obviously help. I think recently we have seen very popular use cases such as stablecoin-backed cards, credit cards or debit cards, for users, individual users in certain markets where they probably don't have a bank account, so they don't have a card, but now they can just have some stablecoin and have a card and start swiping and using their stablecoins, right, or crypto, and. We also see, we've also seen, some, very large exporter importers testing the usage of a stablecoin for facilitating faster and cheaper and more convenient, settlement between Hong Kong and certain countries, especially in the emerging markets. So, in our view, as I mentioned this morning in my speech, we will start, especially being based in Hong Kong. We will start with a B2B use case because we think that's the most, how to say, a prominent, usage of stablecoin in Hong Kong, where it's already a settlement and trading hub. Right, so there are lots of trading companies there who are trading with all over the world, and that's just the exporter importers. But now, actually, with the Chinese companies going global, Hong Kong is usually their first stop, right? So this is like 中国企业出口 and 出海, right? It's two things. So 出海, they're starting from Hong Kong and then going all over the world to do business, and for this, stablecoin can come in as a treasury management tool, which can facilitate much faster and more efficient global treasury management. And this can then extend to, like on-chain finance and RWA and all that. So I think for us, being in Hong Kong, the most promising use case to start with is B2B. But I do want to mention, like in Hong Kong, like I used to say, B2C might not be a very good use case especially in payment because it's such a small market. It's just a few million people. But then actually, as you probably know that in Hong Kong, acquiring cost for merchants to accept payment is actually still very high. It's more than 1.5%. In China, we know like it's like less. It's like a few bips, right? So in Hong Kong, like whether you accept a Visa, MasterCard, Apple Pay, even Alipay, WeChat Pay, or Octopus, it's still more than 1.5%. So let's say if we have, individual users have a wallet that have stablecoin in it, and they can pay with a QR code at the point of sale, the cost can go to, pretty much free, right? Like very close to a few bits. So I think that's also a very exciting use case, right? It would definitely disrupt the market, but it's very meaningful. Yeah.
Thank you, Rita. I think you're the occupant is the best position to facilitate B2B stablecoin payment in Hong Kong. Let me do an advertisement. Actually, DCS from Singapore actually are full focus on the B2C market for the stablecoin payments. Okay, John, the next question will be yours, right? We know that in South Korea, the regulators is considered to issue the stablecoin license. But a lot of local banks are very interested. In Hong Kong, in Singapore, we can also see such kind of trade is that the traditional financial institutions also started to pay a lot of attention, and that they may also want to get the license. Do you think such kind of trade will totally change this market? Is that positive, or is that going to give a lot of competition for the innovative Web3 companies?
Yeah, so at Kaia, because we're uniquely positioned in the sense that we're Web3 native and also Web 1 and Web 2 native, because our DNA comes from the corporate world, right? We were originally established by KakaoTalk and Line Messenger. So we understand all perspectives. But what we believe is eventually everybody will have their own role because everybody has their own expertise. Now, what I do want to kind of like discuss, which is really interesting, is this. So why are institutions so bullish on stablecoin infrastructure? Like, why now? There's a couple of reasons. The most obvious reason is operational excellency and just optimizations. There's a lot of money to be saved using stablecoin infrastructure. The initial cost to integrate these new technologies is not going to be cheap, but in the long term, the efficiencies will end up saving a lot of money. Like, for example, the United Nations recommendation for remittance fees is 3 to 5%. Currently, the remittance fees, especially in Southeast Asia, goes up to 6 to 7%. So there is a lot of room for efficiencies to be made. But more so than that, the kind of like other aspect that most people don't really kind of like see often or like think about too deeply is why are they really doing this? And I think you can see the reason in things like Circle's Arc, Plasma, Tempo, Stable. You have all these payment and stablecoin specific oriented infrastructures coming out, and you have to ask yourself, why is that? It relates to the institutions. Basically, what they want to do is they want to be able to create additional value and then capture that value. Right now, institutions rely on legacy payment infrastructures and remittance infrastructures like SWIFT, bankings, and so on. But there is so much middlemen and there is so much money being wasted and thrown out. So institutions now want to be able to leverage stablecoin infrastructure, not just for efficiencies, but to be able to capture all that value for themselves. So that's kind of like one of the main motivations that we've noticed when speaking with institutions. And it's one of the main motivations why you see a lot of Web3 teams across all verticals really dive first deep into the stablecoin kind of like, meta because of the potential for that value capture.
Thank you. And Xin, this question is for you, right? We know that right now in the market, probably there's more than 200 kind of stable coins. At GSR, we know that you are doing very good in this market. But in your views, in the near future, are we going to be still facing a very fragmented stablecoin market? So there's hundreds of the stablecoins, or finally we probably gradually move to like there's just a 10 or 20 of the stablecoins become very mainstream. I would like to have your opinion on that.
Yeah, I think that's a good question. I think the obvious answer is there has to be consolidation and unification to a central model that works, right? But as with any new industry, when it starts, there's going to be an explosion of different models and different approaches to the same problem. And we see that in layer one protocols, right, for underlying infrastructure. We're seeing it in stablecoins as well now. So we talk about Web3, but I think there's also been 3 generations of digital assets for payment already. So the first one is Bitcoin, and I'd put Libra and cases like that in that bucket. So that promised a lot. Blockchain, amazing new technology. We can be borderless. We can be decentralized. We can do all these things. However, there were drawbacks. So Bitcoin, not a good means of transfer of value, a great store of value, right? Because it's digital gold, but transfer of value is too volatile. The fees are too high. The TPS is too low, et cetera, et cetera. So I think the positioning has changed. Libra, tried to take on that mantle, very ambitious, but it cut into the sovereign power of governments, and therefore that's not something that's very easy to do, that your control over your monetary policy, etc. Right? The second generation sovereign governments fought back, CBDCs, and they said, okay, well, we understand the instant settlement power of these types of technologies. However, we would still like control. So great for control, capital controls, for stability, for inclusion into the existing financial system, but bad for privacy, bad for decentralization, bad for the going against the ethos of an open, permissionless network that blockchain can bring. So now we're at version 3, which is private issuance of stablecoins. I think this will stick. Right? I think this is interesting because it still enables integration into the financial infrastructure that we have today and connection back into fiat, but it accelerates adoption because it's market forces making the issuers fight for territory, for faster go-to-market strategy by competing on yield, on fees, on distribution via centralized and decentralized exchanges. That's where we're seeing the real adoption in emerging markets, like Rita said, right? In other use cases, and that's the model. I think that will be successful. We are agnostic. We are the infrastructure layer providing the underlying liquidity. We have mint redeem services with all these stablecoin issuers, and we are helping with the last mile, the fiat on-off ramp part, because we're licensed. We can do that across 30 different countries. We can do that across 300 different assets. So that's where we come in to support the growth of that model.
Yeah, definitely. I agree with you. The market computation will make the final decision, right? John, this question is for you, right? We know that one of the major pain points for the stablecoin payments is this we call the cross-chain payment. Today, cross-chain is still a very complicated issue, and the efficiency is still not so high, right? So from the Tong side, you are one of the major chain, right? What Tong can do for that, and what will be your future solution to help the stablecoin payments to be more efficient?
Yeah, maybe my opinion is a little aggressive. I really think that the scenario of the cross-chain payment is very limited. Yeah, if you in the past several months, you can see many players are trying to develop their own blockchain, layer 1 blockchain especially for payment, like Stripe, like World Liberty Foundation, USD1, I mean. So I do think that in the end of the game, there are maybe only very few layer 1 blockchain can win the, daily payment game. Yeah, because it's not, every blockchain, layer 1 blockchain can do payment. But if you really ask about daily payment, it will really care about user experience. For example, in China, everybody uses WeChat Pay, use Alipay every day. I think most important reason is because the user experience is really perfect. So, yeah, but there are still some scenario, very limited scenario of cross-chain payment. I think the main problem here is still like very detailed user experience problem, like the speed of the cross-chain, different gas fee tokens, and also, for example, I think if we really want to send the crypto asset as a sending message, which is our slogan in our morning speech, I think maybe most of the scenario we don't need even on-chain payment for many in many markets. I only think that for some less developed payment market, digital payment market, like in Africa, in Latin America, maybe there are some need of cross-chain payment. Yeah, so yeah, that's my answer.
Thank you, John. Okay.
Zheng, can I ask you a question?
Sure,
Because you
please.
mentioned DCS, so DCS is more focused on B2C use cases for stablecoin, and as a traditional sort of card player, right? So how are you looking at it? Like, are you where are you starting the journey for DCS? You know, which part of the value chain are you capturing? Are you looking? Do you think down the line you will launch your own layer 1 chain for stablecoin?
No, we won't. That's definitely not our target. So DCS is a very traditional card issuing and acquiring business. We used to be named as Dynast Card Singapore. That's where DCS come from, right? We issue the Dynast card, then Visa, Mastercard, then Uniper card. We're also doing directly card acquiring, right? But you can see that Singapore is a very small market. It's for traditional card issuing and acquiring, it's definitely a red ocean, right? So we are trying to make some change, and we think that trying to bridge Web3 customers directly into Web2 merchant will be a very good idea. So we're trying to build up this kind of payment infrastructure to help Web3 customers with their USDC, USDT, the assets, directly pay to the Web2 merchant. There's multiple ways to do that, right? For example, you can issue a Visa or Mastercard, which was started from 2024 to issue this stablecoin cards. So Web3 customers can use these cards to widely, spending their in Visa and Mastercard network. We're also trying to build up, we call it the QR code scan payment, so they can use their app, directly scan the QR code to make the payments offline. Then we also work with merchants and acquirers to help them directly debit customers' digital assets to make online payments. That's what we're doing right now. There's a lot of challenges, of course, also regulatory requirements, but we feel that it's a very exciting market and a very exciting business.
Yeah, so just a month ago, OKX, Grab, and StraightX, they announced that they're going to start the payment with stablecoin in Grab merchants, right? Is that something you're going to do?
Exactly. Okay. We have a lot of partners working on the same direction, but the market is super huge, right? So I think that everyone work together can really make things change. Okay, guys, I'm going to give you some spicy questions, right? So let's talk about PayPal's PYUSD. Everyone's read the news, right? 300 trillion PYUSD token was created, then destroyed. I think that's making regulators or the traditional financial institutions kind of like worry if such huge amount of the stablecoin flow into the market, what will happen? You guys are expert in this industry. Anyone would like to give us your understanding or your opinion regarding about this issue?
So I just actually answered that question during an interview as well. I think, obviously that's a human error, right? And that kind of human error actually happened in traditional finance more than many, many times, right? Like, when you have a decimal point that at the wrong place that creates like a huge loss or increase of money in the bank's, balance sheet. That happened a few times, right? Like in recent years. So I think, human errors happen. Or like machine errors happen too. So I think in this case, it probably is a human error, right? Where the minting process was probably, how to say, there was something happened there. So I think human errors happen, but I think, with the stablecoin, I think, it's something that could happen in both TradFi and stablecoin space, but of course that requires. That's why stablecoin or the whole digital asset space needs to grow up, right? We need with regulatory recognition or licensing, at least that comes with a regulatory blessing or credibility to run the project properly. right? Like what we discussed this morning, like from Wild West to a more grown-up space, right? So I think that's you know, like that's why regulatory how to say recognition is important.
And you guys?
Yeah, no, so I think the PYUSD incident is kind of like, you know, the reason why so many lawmakers, although bullish in general around stablecoin infrastructure, are very conservative when it comes to actual like operational kind of like, you know, requirements or like, you know, requirements for licensees and so on. So that's why there's a lot of argument for a higher barrier of entry for issuers and so on. But for me, the major takeaway of this PYUSD incident was we're still very early. There's a lot more room for improvement. There's a lot more room for developing better technologies. So I'm kind of actually bullish because there is so much more work to do. And there's opportunities for everybody to leverage this situation to make a better product, a better stablecoin infrastructure, a better minting process, better regulatory oversight. So yeah, I mean, consider that incident as a bullish catalyst.
I think they covered it very
Okay,
well.
sure. Okay, let's move to the next question. It's also going to be a little bit challenge, right? USDE is a lot of big issues. USDE, we all know that just a few days ago, this famous stablecoin, I believe that it ranks number 6, actually has been pushed down. The value was pushed down about 40%, right? So that's really shacked the people's belief about the stable coins. Of course, we heard the opinions to say such type of the algorithm-based stable coins may not be fully trusted, and the people will still choose this fiat-linked stable coins. But I would like to listen you guys' opinion regarding about this.
I have a view on that. So, sorry, maybe I'll go first and then I'll hand it over to you. So I actually disagree that this was a depeg of USDE specifically, more that it was a failure in market structure and the way things are set up in crypto, unlike traditional finance, right? So USDE, if we look at it, what actually happened, it actually performed relatively well, right? There were $2 billion of redemptions processed one for one during the meltdown in the market, and the depeg outside of centralized exchanges was almost nothing, right? It was 0.3%, 0.5%, something like that on the DEXs that it trades on. So it wasn't a flaw in the design of USDE, rather it was a flaw in the design of centralized exchange liquidation policies. And what happened there is, look, liquidations happen, right? That's normal. If you don't have enough margin, you should be liquidated. However, the protection mechanisms are not quite there in crypto, right? Because you don't have traditional centralized clearers. You don't have circuit breakers like on the Chinese A-share stock indices. You would historically have had a 5% limit. A move more than that, you would have a circuit breaker for 15 minutes, let the market calm down, prevent socialized losses. The exchanges will do this by having insurance funds, but the insurance funds can only do so much, and then you move to automated deleveraging. The problem there is it didn't happen in an orderly way. It didn't happen at the correct prices. Some prices were way off the market, and also the price that the oracles on the centralized exchanges were using was not reflective of the true price from other venues where the liquidity is actually concentrated, from the DEXs. Rather, it was using their own order book price, and that was just the wrong price. They adjusted that very quickly, and they're paying compensation, and that's an admission of a flaw in the design of the exchange mechanisms. But I don't think it was a flaw in USDE, my opinion. Yeah.
John, please.
Actually, USD also launched on Tom blockchain this year. We already got like 200 million US dollar TVL of USD on Tom. I think the main reason of this issue can conclude in 2 points. The first point is the single source oracle from the centralized exchange. Yeah, so I think in the future, maybe regulators should force the oracle of USD or other this kind of product to multi-source oracle and disclose more transparent about their algorithm. Second point is about, I think, the unified collateral mechanism in this centralized exchange. So I think also maybe in the future, the regulation should force to the segmentation of different assets in the unified account. Yeah.
But like John, the other John said, we've still got a lot of work to do, right? This is not the same as Terra Luna. You mentioned that earlier. Completely different type of thing. That was an algorithmic stablecoin. Stability mechanism is completely different to Athena. But we still have a lot of learning to do from traditional finance and also just testing the pipes on new products.
And just to quickly add to the points, because I agree with all of them. I think that was an example of how the current liquidity infrastructure is not optimized for stablecoins. It's not. It's optimized for speculation. It's optimized for trading volatile assets. So there is a distinct need to build out stablecoin specific liquidity infrastructure and swap infrastructure. And I just wanted to take this opportunity to kind of shill what we're doing at Kaia, which is we're actually building out our own stablecoin orchestration layer that is focused on the Asian region. And during this building process, there is so many learnings that we found out. So the DEX that we're building for our on-chain FX engine is completely built from the ground up because we realized, especially speaking with FX traders, there are specific needs that current DEXs do not offer at all. So we actually had to build new functionality ground up that does not exist yet. So yeah, just point here is we're still early. There is a lot of work, a lot of infrastructure, and a lot of products that need to be built specifically for stablecoins.
Fully agree, yes. So here, I would like to give you the last questions, right? Because we used up all the times. So please use one sentence to tell our audience what is the future for stable coin payments in your eyes. So let's start from Rita.
I think it will become really mainstream, and I think to quote Scott Bessent, that the stablecoin market cap will reach 3 trillion in 2028.
This has been kind of a public-facing message. Stablecoin. So let me start again. Asia has always been the center of the global financial world, but it's also at the same time one of the most fragmented regions in the world in terms of regulations and infrastructure. Stablecoins will connect Asia and bring in a new renaissance for Asian growth and wealth.
Yeah, for me, I think it's programmability. That's one of the interesting features of a stablecoin that's not available in fiat currencies, right? So what does that mean? If this, then that, you can have a chain of events. Think of a Chinese commercial bank that is able to issue a loan to an emerging markets country through foreign direct investment or aid. That has a condition on infrastructure being built there, railways that's contracted to a Chinese vendor, for example. I don't know, something like that, right? The programmability of the flow of money to avoid corruption, to avoid other negative impacts that we see in fiat currencies, I think that's super powerful.
Yeah, Tang blockchain will be one of the most important layer one for stablecoin payment in the future. And if you check our booth, just outside this room, check on our wall of the booth, it will say that there is a sentence called sending stablecoin as easy as sending message. Yeah, so that's our vision.
Thank you. So here, at the end of this panel discussion, I would like to share you one numbers. In 2024, last year, the stablecoin payments are already accumulate 270 trillion USD. But also in 2024, Visa plus MasterCard just accumulated 240 billion USD. Sorry, billion, all billion. 270 billion for stablecoins, 240 billion for Visa plus MasterCard. So stablecoin will be the future. Thank you.